Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's streamrg.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome, everyone, to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And you're listening to episode 216. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. Special thank you to our sponsors for today's episode, Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's streamrg.co/PMC. And Quarter, whose mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. Visit your app store of choice to try it out. And that's Quarter, QUARTR. Now, before we get to all the announcements, if you follow me on Twitter, you see that we announced we have a new index or new issue of the magazine. All that pales in comparison to what we've been seeing on the news for the last week with Russia's invasion of Ukraine. There's no words to really say. It's absolute abomination. I haven't watched this much news in forever, and my wife and I have been watching it every night, and it's just our hearts. Everything goes out to the people of Ukraine. Nothing but support. I'm trying to figure out what the best charities to donate to are, because we'd love to figure out a way in which we can help out in any way we can, not just from us here at SNN, but that we can also share. So if you have any recommendations, please just either shoot me a DM or shoot me a tweet, because we want to be able to help out using whatever platform that we have here. So it's been a weird week, right? It's on one hand, there's so much excitement for some of the things that we have going on here at SNN, but it's all humbling in the face of just the absolute terror that folks are experiencing on the other side of the world here. If you're at all affected by this, you have family over there, just our hearts, everybody goes out to everyone. Even if you don't, it doesn't matter. We're just, our thoughts and prayers are with the people of Ukraine, with President Zelensky, and we're just hoping some sort of resolution, so that we can end the bloodshed. It's hard to, now go from that to some of the things that we have going on our show, but we do have some things going on here at SNN. As you guys saw, we announced our index, the MicroCap Review Index. I'll have more information about that in next week's podcast, probably in the intro, just gives a little bit more background. I'll be doing some interviews as well around it, but we're very excited about it. We hope that you enjoy. Go check it out at snn.network/index. There you'll be able to see the index as well as some of the key criteria that goes into that. And we also announced our first issue of the MicroCap Review in about 18 months. So you can go and read that on both Scribd issue, SNN Network, as well as the magazine website, which is microcapreview.com. So we're very excited about all of that, and please go and check all of that content out. We're also excited to host our first in-person event in nearly 3 years. The Planet MicroCap Showcase is back in Las Vegas on May 3rd through the 5th, 2022 at Bally's Hotel and Casino. It's time to see each other. It's time to network in person. Let's make it all happen in the entertainment and business capital of the world. For more information, please go to www.planetmicrocapshowcase.com. See you in Vegas. Now, for this episode of the Planet MicroCap Podcast, I spoke with Joe Koster. He's the founder of Sorfis Investments, LLC. We had met at one of the MicroCap virtual networking events. I believe it was the MicroCap Leadership Summit. Thank you, Ian and Mike. And then reintroduced by Mike Pruitt. Thank you, Mike, who Joe worked with for a number of years. Joe is also editor of the finance newsletter Value Investing World. And with the recent flock to value, I wanted to get his perspective on why, as well as other trends and observations he's been noticing within value investing circles. We also attempt to convey these current events using a golf metaphor. Emphasis on the word attempt. Thank you again for tuning in to episode 216 of the Planet MicroCap Podcast. I apologize for the longer than normal intros. I know I do long intros anyway, but this one, there's a lot going on in the world. So again, thank you for listening, and please enjoy my conversation with Joe Koster. This episode is brought to you by Stream by Alpha Sets. You can find them at streamrg.co/PMC. That's streamrg.co/PMC. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream is unlike any other transcript libraries. Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.co/PMC. That's streamrg.co/PMC. Welcome back, everybody, to the Planet MicroCap Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today is Joe Koster. He is the founder of Sorfis Investments, LLC. I've been following Joe for a long time. I think the first time we met was at one of the virtual cocktail events in the last couple of years. That's a long time for me when I say we've been following each other for a long time, because it feels like an eternity. But anyways, enough of my rambling. Joe, it's great to have you on the show today. How you doing?
Good. Thanks for having me, Bobby.
It's great to have you. So for those that may not follow your blog, Value Investing World, or I've seen you on Twitter or anything like that, where did your passion for investing begin?
So it really came from having a great professor in college. So, from Ohio, I came down originally to Coastal Carolina University as a golf management major. So basically was to teach you, both to get like your, golf pro type credentials, as well as give you a business degree. And, I was fortunate enough my sophomore year, Myrtle Beach sounded a pretty good place to go for college if you want to play some golf in your spare time. So, I was fortunate enough to do an internship at Pebble Beach after my sophomore year. So, which was great, a lot of fun, but it also made me realize I liked golfing and being a lot more than I liked being in the golf business. So, when I came back, I was kind of looking for something to do and something new. And I just had a professor who, taught not just investing, but introduced Buffett. He had, one of the essential Buffett Hagstrom books is sort of his class material. And so that was really where I got interested in investing and found the value investing community specifically.
What was your professor's name? Come on, let's give him a shout out.
Yeah, Dr. Boyles, Dr. Jerry Boyles. He's since retired a number of years ago, but yeah, I was very lucky to just happen to have him show up on my class schedule, and he was a mentor.
First money in for Sorfis too. I'm just kidding. I'm just kidding. But
so we did name it, so before Sorfis, I was working at a fund management company with a partner who we were friends in college, worked together right after school too for a mutual friend of ours. And so we actually did name the firm Boyles Asset Management after Dr. Boyles, because he had that big influence on our life, not just getting us into investing, but he was just an all around great person.
Awesome. So when you're, from that class and his influence, so you mentioned that you had started another fund, but did you just get into investing right away, opening your own PA? And then from there, what was your thought process? Did you think that you'd, one day be able to run your own fund? You're like, all right, I need to get my feet wet, go work at maybe a couple different funds or institutions first?
Yeah. So bringing back so obviously Mike Pruitt, who we both know, actually had Dr. Boyles in class as well in the early 80s. And so he was looking to start a new company, and he came back to Coastal looking for a couple of analysts. And so, on Dr. Boyles' recommendations, he hired me and Matt Miller, who we graduated together. And so we went to work for Mike, and, we wanted to do the whole Buffett partnership. We wanted our fund, just wanted to follow that path. And probably rightfully so, Mike said, well, why don't you learn a little more first? And so we were analysts for him on private deals. And then, he sent us around to people. His background wasn't in, investing and portfolio management, but he had a lot of contacts. So he sent us around both to meet with people, sent us to Value Investing Congress, things like that, for about a year and a half. We went to Berkshire and everything else just to learn. And then a year and a half in, we decided to launch kind of just a friends and family partnership modeled after the Buffett partnerships.
Very cool. So shout out to Mike. Mike, thank you. And so you got to tell me about that first experience going to Omaha. That must have been kind of blew your mind, right? I mean, here you go. Like, this is the land of the value investing nerds, everybody that you could possibly want to meet. So what was that like?
It was good. And actually, I went to Wesco to see Munger the year before I went to Omaha. So I went to Wesco in 2006 and Omaha in 2007. And I think two of my best friends today are still people I met at that Wesco in 2006 and Omaha in 2007. So, I mean, especially if anybody has never gone, like, I highly recommend you just, getting yourself into those situations where you can meet like-minded people and, potentially have friends. You can be, people you can be friends with forever, you can meet. So yeah, I mean, it was fun, and it was, just totally open your eyes to, especially when you're young and you don't really even know how money management firms work or, how to build portfolios. So just to run into a bunch of people, and, I don't think I think it might've been 2008, but, Chris Bloomstrand, who was on your show, him and I met in Omaha, and we've been great friends ever since, and as well. So he was the year after. So, probably, a third of the people I talk to on a regular basis, I got to meet while I was in Omaha. So
that's awesome.
Yeah, if you haven't gone out there, anybody definitely should go.
Are you going this year?
Yeah, I'll be there.
Nice. You come to Vegas right after. I think we're the Tuesday, Wednesday, Thursday right after.
Nice. Are you going this year?
No, Vegas. We have our investor event in Vegas, so I'm gonna be, trying to sleep, not panic, all the above, 10 mass. Yeah, I'm just kidding. But
you should be used to not sleeping. You had a baby a month ago, right?
That's a different type of anxiety and panic.
There you go.
So Joe, all right. So catch us up. You went to work with Mike for a number of years. Boyles Investment Management. So what then led to your launching of Sorfis and basically the structure you have going on there?
Yeah. So we were looking when we were working for Mike at Chanticleer Holdings was the name. Kind of our passion was for the public investment management, but it was really a lot of the private stuff that was becoming the main part of the business. So we were kind of trying to figure out what to do with this little friends and family partnership we had, which was sort of what Matt and I wanted to do. So, we were approached by an institutional investor who offered to basically give us a seed investment, which is how we launched Voiles. So that's why, we came to an agreement with Mike just to separate, so that Voiles would be sort of a separate entity. So we did that for 5 years, and of course they were still, the institutional seed investor was the majority of our capital. And after 5 years, they decided they wanted their money back. So when your big investor wants their money back, that sort of makes you rethink a little bit what you're doing. So so that was in 2018. So I spent a good part of 2018 trying to figure out what to do, and what I really wanted to do was get into the registered investment advisor space. I really liked working with individuals, and we really couldn't do that. If you want to manage your uncle's complete retirement account because he wants one financial advisor, I'm, not going to recommend he put it into our 10 stock microcap fund that we were managing at the time. So I really wanted to get in the RIA space, and but I hadn't really been there much, and it's almost a different business completely from fund management. So I looked around, just trying to decide, do I join somebody or start my own? And ultimately decided, I was kind of in between, but it was, sort of hard when you mid-career looking to do something next. So I didn't have the experience in the RIA space. So a lot of the jobs people wanted were people who were already financial planners, which I was not, or the entry level things. But people didn't want somebody they wanted someone they could start out of school and sort of train, not someone who was sort of mid-career at that point. So, and then especially at the end of, I was thinking hard about it at the end of 2018, early 2019, markets got a little more volatile. Suddenly I had stocks I thought were pretty cheap. So I decided, well, and I was lucky at the time, our child wasn't born yet. My wife was working. So I knew it was going to take a few years before, we sort of could get to scale. But I just decided to, go ahead and get started, and, sort of saved 3 quotes on my phone that I just kept reading every day to sort of give me that motivation to go out and try it. And and here we are.
What were the 3 quotes?
Yeah. So they're still on my phone because I like it. So the one was Peter Kaufman. More important than the will to win is the courage to begin. The other one was Lou Brock, the baseball player.
Yep.
Which I think also came from Peter Kaufman. This quote was, show me a guy who's afraid to look bad, and I'll show you a guy you can beat every time. And the other one was Buffett. I think this was in maybe Charlie Rose interview a number of years ago. He said, don't fear failure. Don't let it eat at you. Don't look back. Just keep going. You're going to have some things, but forget them. Go forward. So it was just kind of this, at some point, the whole kind of the man in the arena type philosophy. You got to get out there and just try. And so I went in there and did.
Nice. Here we are.
Yeah.
I'd like to take a quick second to tell you about this episode's sponsor, Quarter. With Quarter, you get frictionless access to conference calls, investor presentations, transcripts, and earnings reports from markets all around the world, straight from your pocket for no cost. Quarter's mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. The first step on this journey is to let you, the user, interact with the company's content while you're listening. Visit your app store of choice and try it out today by searching for Quarter. And that's Quartr. Now back to the show. So you mentioned also that, obviously I've known Mike forever. Chanticleer, for full disclosure, they actually presented at one of our events, I think in like 2015. They were MicroCap. So was that your initial exposure to MicroCap is through Mike, or had you come to MicroCap outside of that?
Yeah, we had started, it was through Mike. So it was originally we had started the partnership to sort of have the flexibility to do everything. And then we really realized, both with our experience, it's a lot easier to understand small companies, but it's also, just a niche that, for all the reasons people talk about on your show all the time, that if you really can do the work and the due diligence and the groundwork, you can understand these businesses better than other people can. So we just basically decided to totally switch and be only microcap. So our fund, in the beginning, we were a little bit of both, but then we just switched where we only focused on microcap. And then sort of when we moved into Boyles, we mostly focused on microcap too. But so yeah, both US and international. Yeah.
Gotcha. So, before we get into, your whole investing philosophy and your ideal investment, I'm going to ask you about that. I wanted to cover one topic because, you are the editor of Value Investing World. And in that newsletter, you highlight links, a lot of different information that's going on within value investing circles and interviews, stuff like that. So I wanted to ask you, what have been some of the fascinating trends and observations in value investing right now? One last thing before you even answer that is, there has been this flock to value. Growth has just gotten killed. I mean, microcaps have gotten killed too, but growth has just gotten killed in the last little bit here. So love to hear your thoughts there about some trends and observations.
Yeah. Well, the biggest trend was why it took so long. As you're probably well aware, I mean, it was, for really from 2009 was a great time. There were just cheap things everywhere. And then sort of from 2010 until this past year, it was sort of, relative performance was not in the great direction if you were a value investor. And I should define value. That's sort of using more of the factor value. I mean, obviously my general definition is what, Munger likes to use. All investing is value investing. You're just trying to acquire less than you're paying for. So, but, a lot of people like us and how I, came into the investing business was, just trying to find a lot of stuff below book or stuff at, single digit multiples of earnings, which, one of our bigger positions back in the day was a company in the UK that, I think it was growing nicely. We bought it at, 9 times earnings, great company, kept growing low double digits a year. And, 5 years in, it's at 6 times earnings. So, we're down by a third on the multiple, and we've just, basically gone nowhere because even though the business is growing, the multiples kept coming down. So, I think there was a lot of us who, even in companies, not the high growth, but decent growth, and we're doing what we expected, but stocks were going nowhere. So, I think the move to so-called, value growth factors it's kind of cyclical, and it's certainly, I think what we've seen since 2020 is the speculative bit has, that really got into the markets and got a whole lot of people interested in the markets. If there was, whether it was a growing company or non-growing company, it really didn't matter. There was no valuation work or anything being done. It was, what's popular, and things were just bought regardless of the fundamentals. So I think maybe a little more than saying value versus growth move we've seen lately is probably a little more move back to fundamentals mattering a little bit more.
I mean, is there some macro reasons for this? I mean, there's lots of, things flowing out there because with inflation and potential Fed hike rates happening, does all that have something to do with that from a general perspective, or is it a bit more convoluted than that?
I mean, that might have something to do with it, but it's also, I think, a little more just human nature. As Ben Graham said when he was testifying back in whatever it was, the 50s or something, why do stocks go up and down? Why does it happen? Why does value eventually get realized? Well, nobody really knows. Eventually it just does. So sometimes there are events that trigger that, but sometimes it's, things can only trees can only grow so high, not to the sky. And I think we've just sort of seen some of that finally start to matter.
Yeah, but I mean, in this time period where we're at right now, I mean, was there something that triggered it that you could kind of look to, or I don't know. It seems like it kind of happened overnight, but there are some things out there that could potentially explain this kind of going back to fundamentals.
Well, I think certainly you could say interest rates and the inflation is worrying people, and they're starting to care more about, actually getting cash returned from their money. So, but yeah, I don't, is that really the catalyst or not? I don't know. I think it's too hard to really predict. Even in hindsight, these things are hard to predict. But what was really the big catalyst in 2000? It's still hard to say. It just sort of eventually got to a point where people stopped paying crazy prices for things and started buying the things that look cheap. So,
got it. All right, man. Well, so this all then leads into your investing philosophy. I think we can all assume that there's some value investing aspects to it. Focus on the fundamentals. So everybody has their own way of doing it and skinning the cat. So how do you think about investing? What's your philosophy there?
Yeah, so we do three very different things. So, we just ran a concentrated microcap strategy back in the day. And so since I've started Sorfis, I wanted to be able both to use my knowledge as well as what I continue to learn to help more people. And so, I think the longer I'm in the investing business, the more I realize opposites are often true. It just depends on the person. So sometimes concentration is better for people. Sometimes diversification is better. Sometimes bottom up is a better thing to look at. Sometimes top down matters more. So it really just depends on circumstances. So we have three strategies basically. And the first one is probably the one we've talked about a little bit, which is, I'm just a focused, concentrated strategy, kind of trying to find 6 to 12 best ideas. That's really something that's better for someone who wants to use us for a small part of their overall portfolio where, they want something to diversify their big picture portfolio. But for us, it's going to be a part that looks totally different from anything else they probably have in their portfolio. So then the second strategy, is kind of what we call the diversified strategy. I guess, let's see, the best way to describe this would be, well, we can do a little thought experiment with you, Bobby. So let's say you have a relative.
You're going to make me think. I got to actually think now. This is not good.
That's right. So because this seems so different from the other strategy, it's easier to explain why we use it. So let's say you have a relative that comes to you that you really care for, that let's say she's in her early 60s. She's had a long career. She's about to retire. Her husband's about to do the same. They have all their investable assets in their 2 401ks. They've received this nice cash bonus when they retired. So they're going to have this account that's going to be taxable. And these loving relatives of yours come to you and say, Bobby, what should I do with my money? And Bobby, am I going to have enough money to travel and do the things that we want to do in retirement? Where do you send them?
Oh, they should get into the riskiest possible microcaps. They should, not, pre-revenue biotechs. I think that would probably make the most. I'm kidding, of course.
Exactly.
But the opposite of what I just said.
Yeah. But do you specifically send them to somewhere? You say, go to X friend, or I don't know, X company.
I mean, usually in those cases, you want to send them where it's someplace that they have safe, but they'll be able to have enough cash to do everything that they want to do while also continuing to just fund all that. It's safe. Safe as safe can save, no risk.
Yeah. So, but they're going to lose to inflation. So okay.
Right.
So a lot of it is saying, how much risk do you want to take? And so it's kind of what I'm trying to do with the diversified strategy was I had people like this, both in mind and also some people I knew who I really couldn't help before. But like you, I wanted to say, I didn't really have I didn't want to send them to, all right, go down and find your local Merrill Lynch office, people that maybe aren't independent. There's plenty of good financial advisors out there, but so I just wanted to sort of create that. So that's sort of what the diversified strategy is. It's, again, for some people in the example I used, in that situation, maybe they can manage it all their own. If they're the kind of people that read the Wall Street Journal every day, read a few investing books a year, they can probably open an account at Vanguard or Schwab or wherever and handle things on their own, diversify. But what I've found is there are a lot of people happy to hire someone to do it for them. They want to live life. They want to enjoy life. They don't want to have to worry about the ups and downs of the market. They want someone who's going to actively manage, their taxable accounts. So when there's big drawdowns, you can make the move to save them thousands or tens of thousands in taxes. If they have a financial question, they want somebody they can call who knows them, who they know. They don't want to have to call an 800 number or something to talk to somebody. So for those kind of people, or for people, early in their careers or mid careers who, just want to diversify widely, but don't want to do it on their own, then that's kind of what the diversified strategy is for. We're trying to be that sort of one-stop shop with someone. Hey, you want, we're going to work with you. We're going to go over your income, your assets, see what you want to do in life, and say, yes, you want to travel, you're fine. Go travel. You got plenty of money. We'll handle the ups and downs, or, the things you want to do in retirement. You're going to have to make trade-offs for what, your total income is. And so that's sort of what, it's almost more of a service than a product or a strategy. It's a strategy, but it's really a service you're providing for people. And so, that's kind of what we wanted to create with the diversified strategy. So that's that strategy. And then the third strategy is one we just launched, which is, it really was a client came to me and said, I kind of want a bunch of equity exposure, but something that looks different from the indexes. But I want to be very diversified because I'm going to be giving away money, between 3 and 10 years from now. So, but I want to have something where there's going to be a lot of winners and maybe some losers too, so that, if there's losers, we can take the tax losses, but the winners will make up potentially. And then I can use those big gains to make those my charitable gifts, and then, be very tax efficient with the way I'm going to give away my money. So it was basically created as a way to, create diversification that looks different from the indexes for people that want that, as well as for the specific reason where it also can make it a good strategy for people who have like this 3 to 10 year time frame of giving money away. And so that's really a kind of what we just launched. So it'll be like a 50 to 100, maybe even as much as 200 stock portfolio, where it's really more of the coffee can type approach, where, say, unlike the concentrated strategy where I'm really doing a lot of work on companies, or the diversified where we're just diversifying widely, extremely widely. This will be, basically we're trying to build a database where, we obviously you're the same way, where we follow a lot of great investors. We love the thesis. Maybe we can do some work on it, but it's not sort of something we're going to, spend months digging into. So it's a way to, improve the buying on the front end and then just kind of holding. So it's sort of that trying to buy right and hold on, as I said, kind of that coffee can approach to building an equity portfolio for people with certain needs.
So I want to focus in on the concentrated strategy. Within that, because obviously, look, that takes a lot more work. That's where everybody, I think, listening, we find the nice little nuggets to understand, your thought process and your thinking when you're looking at an ideal investment. So what's some of your criteria for the concentrated portfolio or that strategy?
I mean, the main thing's downside first. So, I mean, for me, it's really 4 things. So it's 1, I want downside. So that can come from 2 things. It can either come from asset values or it can come from competitive advantages. So, I want, if you have a good business with big competitive advantages, the price you pay isn't going to matter as much if you can hold it for a long time compared to when you have something that does not have competitive advantage. So I want downside, either asset values or competitive advantage. Then the second part is really the business quality. So this is both, judging how good of a business it is, does it earn high returns on capital? And more importantly, where's that money being reinvested? So it's really a business quality analysis, which, sort of helps determine exactly how much you want to pay for it. But some people only buy good businesses, but there's a price for everything. So, but it's more about trying to determine, are the competitive advantages real? Are they durable? The third part is the management. just are these people you want to be partners with? Life's usually too short to partner with bad management teams. Then the last one is price. I mean, almost everything's a good deal at one price and a bad deal at another. And, I'm willing to have lesser quality businesses or, even management team that are okay. The price is right. So it's really just those things, downside first, and then business quality, management, and price are just sort of the things we're trying to, to learn about, to create some big picture narrative for when to invest.
Gotcha. So as part of that research process, when you're digging in to a potential new idea, tell us a little bit about, how do you evaluate management? What are some things you look for? Do you like to speak with management? I mean, just that alone, some folks, they'll say that management's important to them, but even in microcaps, they'll say management's important, but I don't even want to talk to them, which is, I find kind of interesting, but a strategy that can work nonetheless. But how do you think about it?
Yeah, I mean, I think kind of like we were talking about earlier, where the longer I'm in this business, the more I think it depends. Almost every question has opposite answers that are right in some situations. So in some cases, yes, but I mean, especially smaller companies, talking to management can make all the difference, and really even more than talking to management, because the reason people don't talk to them is because they can, they're good at selling their business. They can be promotional, and I think that's totally true. Especially, I'm sure I still do it, but especially when I'm younger, got fooled plenty of times by a great management team that told a great story, and that's definitely a lesson for all the young investors out there. I think to some extent, when you first get into this business, it's almost dangerous to talk to management or to read investment write-ups, because if you read too many without having sort of this experience to filter things through, everything sounds good. I mean, so depending on the business and how much I need to know, 'cause I mean, sometimes you just really, the key is, if a business is profitable, of course, how that company reinvests that capital is going to make your return over 5 to 10 years. And so you really need to understand, are they just throwing money at stuff to grow, or do they actually have a well thought out process? So, but some companies, you don't need that, especially bigger ones. You basically can get everything, or, from just reading the files, reading the transcripts and things like that. So sometimes, yes, I mean, the best things I think I've found over time are, it's not easy, especially when smaller companies, to find employees or former employees, or if there's a long-term shareholder who's owned the shares for a long time. I mean, if you can find that person, you usually can understand the business pretty quickly with just making, one phone call by talking to somebody like that. So the big picture on the management is sometimes yes, sometimes no, but it's a lot of times, people who know the company, whether it's a long-time shareholder or an employee, can be even more valuable because they'll just be more honest with you.
Very cool. Do you have any tales from the crypt? Some fun lessons in microcap land. I mean, you don't have to name the company. I'm not asking you to, but I'm sure you've clearly been around for a while, and you've been around some of the same circles as me. So you must have a couple funky, funny, hairy ones out there.
Well, what I'll tell you is, without naming specific names, but there's one company where it sounded great. There were some smart people invested in it, but all you had to do was speak to mid-level employees, mid-level management. You knew right away the company was not what it seemed. Somebody came in and bought it and overpaid for it by quite a bit. They never talked to any of those mid-level management team people. Or if they would have, they would have saved, probably a couple $100 million almost, given the buyout price. But that's the thing is, it does surprise me of even bigger companies who have a lot of money often don't necessarily do the due diligence that needs to be done. Again, sometimes you still get bailed out of your shareholder because someone will come in and buy them and overpay, especially with all the capital out there now. But yeah, if you find the right person, sometimes you can know and right away if what's actually going on in the business. But yeah.
What would you say is an investing experience that changed your career and your mindset the most?
Yeah, I mean, I would say really coming out of school, there were probably two things. You know, Buffett and Munger, they like to talk about finding the right heroes in life. And they certainly became two of mine when I, first started learning about Buffett and, read every shareholder letter. It's one of the first things I did, from start to finish. Started with, back then, it started in the 70s because I didn't have the partnership letters back then. Just read every one in a row, just one a day. I mean, that totally changed my outlook on investing in business. And then, of course, getting into Buffett got me into Munger. And that was probably Munger's idea of worldly wisdom and trying to become a multidisciplinary person is really probably the thing that had the biggest influence on my life. I mean, there's that saying, the frog in the well knows nothing of the mighty ocean. So it's like he really, learning about him, just, I wanted to know about the ocean. I wanted to find that knowledge that just gave me a different perspective on life. I mean, if you learn the basics of, evolutionary biology, you're going to have a different outlook on the world. If you learn the basics of psychology and this judgment, and how easy it can be to fool people and fool yourself, especially, you'll have a different approach to how you handle things. If you learn just how big and vast the universe is, and how we're just sort of this tiny speck, suspended in a sunbeam, to paraphrase Carl Sagan, that changes your outlook on the world. So it's just amazing and almost inspiring that sitting and reading, one book can kind of change your life and change your outlook on life. And, that all started just from, basically Munger's worldly wisdom. And, of course, thanks to Peter Kaufman for putting Poor Charlie's Almanac together. Because he, in Munger's speeches and wisdom, he has all those sidebars that pretty much just lead you to where you need to go to learn about all these things. And so yeah, that was the biggest influence on me for sure.
Very cool. So, you said at the beginning that you're a golf guy. Golf, I'm assuming that's still your sport, right?
I mean, yeah, I haven't played much since having first child last year, but yeah.
That happens, just wait until you have more from there.
There you go.
You really will. Yeah. But anyways, I want to do a little comparison time. Let's have some fun with this. I'm not here to say that I'm like, Joe House and following, with Fairway Rolling or anything like that. But I listen to them enough to follow a little bit. But, from what would you say what time period are we in right now in value investing, if you had to use a golf analogy?
Well, I think in regards to this cycle, we've, it's been going pretty long. So maybe not just value investing, but the whole upward move of this bull market. Again, we've had volatility this year, but we're still, as far as overall valuations in the overall market, and it's pretty widespread. Obviously, a lot of those tech names, were leading the way until the past year, but everything's been pretty extended. Of course, a lot of that's driven by central bank support, and then obviously since 2020, unprecedented central bank and fiscal support. So, given the length of these cycles, we're probably late in the game on the seventh playoff hole. Still opportunities if you can find the fairway, but yeah, you need to be careful out there.
Very good. All right. I think that's a pretty good place to end it. So for more information, where can our audience go and find more information on you, follow you on social, as well as Sorfis?
Yep. So the Sorfis website is sorfis.com. You can find my contact information there. The newsletters, valueinvestingworld.substack.com. And I'm at JT Koster on Twitter. Pretty much that gives you all you need to find me.
Very cool. All right, man. Well, listen, thank you so much for doing this with me today and the conversation. So good luck, stay safe, and I look forward to our next chat.
Thanks. You too, Bobby. Thanks for having me.
Thank you. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.